Hey there, Dale.
Hey, how you doing?
I'm doing good. It's a beautiful sunny Tuesday. We've got another market update for everybody. How are you?
Perfect. Doing great,
All right.
doing great. Beautiful Tuesday.
All right. Well, let's talk about the credit education seminar. It is coming up Tuesday, November 7th, 5 o'clock p.m. online and in person. Again, credit is the biggest reason you have a good or a bad interest rate. So why not be educated about it? Why not get prepared for that good interest rate? Come and see us if you are interested.
Yep. And then on the third Tuesday of the month, November 21st, is our first-time homebuyer seminar, again at the office, 5 o'clock, downtown Jackson, in person, online, smoke signals, 7 to 4, and any other way you'd like it.
So Dale, we actually have some very interesting changes coming up. Now, before we go any further, these are rumored proposed changes. A lot of people are buzzing about it, but we haven't seen formal guidelines, have we?
No, I haven't seen anything black and white from FHA, but this is the buzz that's going around, so we thought we'd get in front of it and just let you know the proposed changes, and quite frankly, they're pretty good changes.
They're actually really, really good changes. So first off, we'll talk about DTI. First, it's debt to income ratio. So this is all of the money that a borrower makes divided by the amount that their debts come into. So we're talking about the mortgage loan, of course. We are talking about credit cards. We are talking about student loans. We're talking about tax liens, anything like that. Those go into a debt to income ratio. We're not talking about the electricity bill. We're not talking about your Netflix account. We're just talking about those kinds of debts that usually appear in a credit report. And the nice part about this is that we have an increase not only in the front end, but take a look at that back end proposed increase. That's a big deal, isn't it, Dale?
That's huge. So let's be clear. The front end simply means your mortgage payment as it relates to all of your income. Back end is your mortgage payment plus other debt, such as car loans, credit cards, student loans, those kinds of things, plus your mortgage payment. So there's, the front end is a little bit of wiggle room, not a lot, but the back end is pretty stout. It's a 7% increase. So if you make, say, $6,000 a month, that is allowing about another $500 a month in debt and still qualify for a loan. It's pretty spiffy.
Now, there is another caveat that we have to put there, and this is irrespective of what year you look at, 2023, 2024, whatever year. There's still something that goes into credit scores. Again, credit education seminar, come see it.
Yeah.
But credit scores, different types of liabilities, different risk factors that go into underwriting. And even if the allowance is 47 front end, 57 back end, you could have a borrower that has a poor credit score or lack of trade lines that pushes that number down for the individual. So these are kind of like the idealized maximums, but you can imagine that everybody is going to be brought up with these increases. So borrowers will have a greater chance. But we haven't even touched on the rental income.
No, just to add in here, it's called AUS, Automated Underwriting System. Basically, you put all the information in the computer and it'll spit out yes or no, approved or not approved. So even though somebody meets these exact criteria, maybe their credit score isn't enough, maybe their reserves isn't enough, there could be some underlying factors. So important to note, everything is always subject to the AUS approval.
Yeah. Now, going back to the rental income, this is actually a huge thing with FHA. There are a lot of other changes, but these are what we focus on today. Previously, rental income for additional dwelling units, they didn't matter. You couldn't use that as rental income to offset your debt to income ratios. However, the proposal for 2024, and this is huge, is if there's already pre-existing ADU on the property, you can use 75% of that rent to offset your income. In addition, if you do a 203K, which is a rehab loan through FHA, you can use 50% of the proposed income to offset your debt to income ratio.
Right. Now let's be clear, ADU is an accessory dwelling unit. Granny flat, a little cottage in the back, those kinds of things.
Yeah. So these together are really important things. And I want to put it in your ear now if you're watching. Here at Homestead, we're going to do something very special with ADUs fairly soon. It's under works, but combine this with these FHA proposed changes. Again, they're all speculation until they're on paper. But with what we're coming out here at Homestead and these big changes to FHA, this could be a huge opportunity in the future for your borrowers. So if you have any questions, reach out to us, give us a call. We would love to answer them. And if you just want to chat and say hi, give us a call also.
Absolutely. We'll help you any way we can.
All right. Dale, thank you so much. And I'll see you again next week.
Have a great week.
All right. Bye.
Bye.